Should you start an LLC for real estate investing? Well, it's one of the most common questions that I get. And while the short answer is, it depends. Let's break down when it makes sense and when it doesn't. What's an LLC and why use one? Well, an LLC stands for Limited Liability Company. It's a legal entity that can own real estate, businesses, property, and more importantly, it can protect you from your personal liability. If someone sues you over something that happens at your property, your LLC takes the hit, not your personal assets. That's the big draw. The key benefit is the legal protection. An LLC helps you separate your business from your personal. If you're renting a property, flipping homes, raising money from others, owning through an LLC gives you that legal shield. And in most cases, it's simple and affordable to set one up. Do you need one? Well, not always. Yet, I would say always. An attorney may tell you not. But if you're buying a single family rental with a conventional loan, you might not need an LLC, at least not right away. Most residential lenders won't fund a loan in an LLC name directly. So you may need to buy your property in your personal name and then transfer the deed into the LLC's name if the lender allows it. Most times they will if you stay on as the guarantor of the loan. Alternatively, you could get a commercial loan or work with portfolio lenders if you're investing under an LLC from the start. When does it make sense to use an LLC? When you're building a real estate portfolio of multiple properties, you want clear operating roles and legal protection, including how income and losses are treated for tax purposes. If you're flipping, wholesaling, raising capital in real estate, in all those circumstances, an LLC, in my opinion, is the perfect entity structure, and it adds professionalism and protection. So when to keep it simple? If you're just getting started with one rental property and limited liability exposure, you may want to buy the property in your personal name. But I still think for $300 to $500, open an LLC and give you that protection legally. Just make sure you have strong insurance regardless, and possibly even get an umbrella policy that protects you on top of the general liability policy for the property. As you start to scale, I would suggest creating a holding company LLC. This is an additional layer of protection where you will own all of your ownership interests in all of the properties in a holding company. It gives you additional protection liability-wise, and it also makes it easier for tax filing as all the individual property partnerships issue a K-1. This is the profits and losses statement on the tax return from the property LLC or partnership. And then that flows through to your holding company so you can see all your K-1s under one entity, and lenders and CPAs and bookkeepers like it. Plus, it keeps things a lot more simple to keep track of your income and losses. Do you need to form the LLC in the state you do business in? Not always. If you do open up an LLC in a foreign state, then the state that you're doing business in, you will need to register with the Secretary of State with that foreign LLC, meaning that the LLC is not in the state that the property is doing business in. You just have to get a license or permit to do business and be recognized as a company in that state. Or you can just open up the LLC in the state that you own the property in. Once you do that, open up a separate bank account that is an asset of that LLC. Then you're going to have a bookkeeper make sure to reconcile your books only for that LLC. Do not commingle funds, meaning you're paying for expenses for other properties or for other businesses that don't pertain to that actual property that is owned in that specific LLC. You want to make sure that that insurance policy is in the name of the LLC, since the LLC owns the property. And you're going to want to draft an operating agreement, even if you're the solo member of the LLC. That allows your heirs to have a easier transition if you were to pass away and that property is to be transferred to them. We get into that in other videos around trusts and wills, but for these purposes, an operating agreement is essential regardless if you're the only owner or member versus having multiple partners or members. I highly suggest that you use an attorney to draft the operating agreement. The operating agreement is the essential partnership or business agreement. This is going to outline the key terms of the partnership. Who has voting rights? What is the profit sharing interest? What are the losses? How are they treated for tax purposes? Are there any special provisions for partners to get paid different profits along the way of the investment? What if there's a capital call, meaning that more money needs to be infused into the partnership? How is that treated amongst the partners? If the property needs more capital, what happens if one partner lends money and the other partners don't? What if one partner wants to be bought out and the others don't have the money to buy them out? All of these things need to be covered in the operating agreement, and that's why I highly recommend using a professional real estate partnership attorney to do your operating agreement. Once you have a template, then you can move forward and use it again and again. But if you don't address these items and they do occur, that is where litigation, mediation, and long legal battles can transpire if these items aren't addressed in the paperwork of the operating agreement. So the final thought here, forming an LLC doesn't make you a better investor, but it can protect the wealth you're building. So start simple, start smart, and build your structure to match your strategy. So if you want help deciding how to structure your LLC operating agreement or any other questions regarding your LLC setup, click the link below to download my free tool, the Real Estate LLC Decision Checklist. It breaks down exactly when to form one, what to watch out for, and how to protect yourself as you scale your real estate investing. And if you're serious about building your real estate investing business, check out my next video on how to structure real estate partnerships and investor profit splits. I'll see you there.